Welcome to Markets Now. I'm Michelle Rook along with Jim McCormick with agmarket.net. We're seeing lower prices this morning in the grains and hogs, a little bit higher in the cattle futures. And let's talk first of all, Jim, about the grain trade. We're drifting here. Is that weather, poor exports? What are we trading this morning?
I think right now it's probably anything, Michelle. It's probably weather. If you look at the near-term maps, we are bringing another rounds of rain across the Midwest over the next 24 to 48 hours. The longer range maps, 6 to 10 day to 8 to 14 day maps that came out last night are saying above normal rainfall and really no extreme heat. So that's really what we need right now. I mean, the fact of the matter is a lot of this corn is very, very short compared to historical natures. But a lot of the agronomists are telling us, Michelle, that we can still have some pretty good corn if we have cooler temps and rain. And that's exactly what we're getting on the forecast right now. So putting a little bit of pressure on the market. Beans obviously are made or broke in August, but getting rain here in early July can't do anything but help the bean crop.
Yeah, what are you thinking about yield, though, especially as we go into the WASDE next week? There's a lot of debate. The drought monitor yesterday showed 67% of corn acres in some level of drought, I think 60% on beans. Does USDA have to come down on yield?
I said they don't have to, but we're anticipating they will, Michelle. We're thinking 5 to 6 bushels drop, and the corn is really not out of the realm of probability. I mean, if you dropped it 5 bushels, that'll get you down there to what, right around a 176, 176 and a half. Last year around 173. So I think they're definitely justifiable lowering that corn yield. Beans, on the other hand, is a little bit trickier argument. I've heard some analysts out there anticipating it. Our group's in essence saying thinks it's going to stay steady at the moment, as, like I said, August rains are really going to determine this bean crop. And this rains we've had recently have actually seemed like they've perked up the crop a little bit.
Yeah, and you and I have had this discussion before about how much of a yield drop would you need to offset, especially now these higher acres on the corn side of the equation, to get us, even close to a 2 billion bushel ending stocks figure.
You probably got to push that corn yield at least down 10 bushels at this point in time and then see what they do with the demand. It could have to go a little bit lower if you do lower demand. We did get some good new crop corn exports today, but the reality is export pace for new crop sales of both corn and beans have been very dismal. Competition from Brazil is just too much. The prices have narrowed up a little bit near term, but right now we're just not price competitive. So I think in the long run, demand is going to get cut. But right now, the number I'd look at is at least a 10 bushel drop at a minimum to get this market, projecting to carry out below 2 billion.
So at $5 December corn, which is kind of where we're hovering at, are we fairly priced?
I think maybe we're fairly priced at the moment. I think hopefully we can get a little bit more of a dead cat bounce, off of these lows. But in the long run, I think if you get a carry out over 2 billion, you're looking at, stocks use around 14.5%, something like that. The argument is this corn market's probably going to go a little bit lower into the fall as the market tries to figure out where to put this crop combined with the bean crop.
Yeah, let's talk about that bean crop. What are you thinking there? Are we at pipeline supplies, do you think, in terms of ending stocks by the time you figure in 4 million less acres here, and we've had pretty decent demand on the bean side of things?
I think right now you could argue it. I mean, the fact of the matter is, unlike the corn, like I said, the corn is like 10 bushels before you really tighten up that balance sheet. You lose a bushel or two off these beans, this balance sheet's going to get to essentially next to nothing without a revision, without essentially, finding a way to essentially peel off demand. So this bean market, we've kind of calmed down a little bit here, but I think, as we ramp up in the latter part of July into August, any kind of a hint that the weather is not cooperating and some of that heat dryness we saw earlier in the summer, this bean market could explode because there just is zero room for air if we start losing bean yield off the national trend yield.
So is that what'll get us over the $14 mark on November beans? It seems surprising to me that we couldn't get there when we lost those 4 million acres, Jim.
It looks like that's what it's going to take. We had a very bullish reaction to the report last week, and the market just really could not follow through. But yeah, I would believe, Michelle, if they start getting fear that the national yield is going to drop at least a bushel, maybe two, I think you get a very good shot. They'll push that bean market 14.25, make a run for the near-term highs. That may pull the corn up a little bit on its coattails. But in the big picture, like I said, unless this corn yield looks like it's going to drop below 10 bushels more off a trend, that rally probably ought to be sold.
Gotcha. Okay, so the wheat market tried to recover a couple of days ago. We were probably a bit oversold after 6 down days. And, where is this wheat market going from here? Is it just a follower at this point?
At the moment, it's a follower. It's kind of in the middle of its range right now. Look for a little bit of choppy trade. I mean, We've got some concerns about the harvest activity, a lot of rain quality concerns for part of the wheat belt. That's something we're keeping an eye on here. The other thing is the grain corridor that shut. It seems like we're going through this constantly, Michelle. But Russia continues to threaten to shut down the grain corridor at this point in time. If they would shut down the grain corridor, it could allow the market to put a little bit of premium back in the market. The other thing we're keeping an eye on is the Russia wheat crop. They've been the ones that essentially been keeping the world wheat prices down with their abundant supply. If that crop ends up being less than what people are thinking, that also may allow this wheat market to rally a little bit.
Yeah, some pressure here today, though. And of course, some of that has been tied to the fact that we just aren't really competitive. You mentioned Russia. They keep undercutting us in the market. And so we just don't have the demand base there to really push this wheat market. Is that part of the problem?
That's part of the problem right now. We've got a little bit of excess supply. But like I said, if the world we start hearing problems in the world and we start seeing that demand shift back to us on the export sales, that's what we're going to need to really get the wheat market excited.
Okay. Cattle market, we are back up this morning. We had reversals here that we put in this week. Are they going to hold, or what are you thinking? Are we going to continue to consolidate under these levels?
I'd look for us to consolidate, maybe a little bit weaker potentially. We are into the dog days of summer right now. The beef demand tends to wane a little bit at this time of year. The other thing we're looking at is the economy. The jobs number that came out today was good, but the reality is it is definitely trending lower. I think it was it was over 200,000, but it was the lowest jobs number since we've had gains, I should say, since the pandemic. So you are seeing the Fed raising interest rates is starting to have an impact on the job growth. And as the job growth starts to slow down, that traditionally has a negative impact on beef demand.
Okay. Is the only reason that we're up in cattle today because the corn market's down, or?
I would argue that's what it is. I mean, right now there's not a whole lot of fresh news. And, we are seeing some people trade that inverse. I mean, yesterday in the grain market, we saw them aggressively unwind the corn bean spread. Today, it may be a little bit of cattle, buying the cattle based on a little bit weaker corn market.
Yeah. And maybe some cattle hog spreads. We've been seeing some of the unwinding of those here as hogs have gone up, and we've had like a $27 to $30 rally. We're down today. Is this just some profit taking? Is it time for a pause, Jim?
I think you nailed it, Michelle. It's time for a pause. We've had a heck of a run. We're a little bit technically overbought, and it's time. Look for this market to pull back a little bit at the moment. And like you said, that may be also supporting the cattle are unwinding that spread. There's a lot of people like to trade that cattle hog spread.
Yeah. Otherwise, do you think, do we have much more upside in that market, even if we do recover here, just because we've had such a big run? And I know seasonally we got to push here from better demand due to the cash trade going up, but how long does that usually last?
I think we're probably getting close to at least a near-term top. We're getting up to chart resistance points. So I wouldn't be surprised if this market pauses just a little bit. I mean, a lot of people got excited about the pork, Michelle, and it was some of the cheaper protein out there. With this run up, obviously it's going to make it a little bit more expensive. The producers out there, or consumers, want to try to go cheap protein. They're probably going to shift over to the chicken. The chicken is still probably the cheapest protein out at the moment. So that may hurt the demand for pork, at least in the near term.
All right. Thanks for joining us this morning. As always, that is Jim McCormick with agmarket.net, and that's Market Snap.